Tuesday, April 7th, 06:10 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Current situation is we're approaching the big event occurring this month. It's a binary event. We know when it is. We know what it is. Wednesday, April 29th, 2 p.m., FOMC meeting. Expectations are the Fed, U.S. Central Bank, as we call it here, the Federal Reserve, is expected not to lower rates. So, that being said, you should already have a bias what you expect between that event and now. Big thing will be when that decision is made, it's going to be public record, as well as their press release statement of the current situation and ongoing situation with the economics. Again, I said they expect the interest rates not to be lowered. Going to look at the US dollar and the major currencies in the US dollar. Often when nations, countries, central banks lower their yields, it affects their currency. When they lower the yields, it often reduces the value of their currency. So, since that's not looking to likely happen here, that would give more of a bias to continue having a stronger US dollar. Looking here again at 4 grids, each one's a week. Far left, US dollar index. Second from the left is the euro. Third from the left is the yen. And the last one on the right is the British pound. So on the far left, yellow horizontal line, the high of the year for the US dollar, which was last week. And current week, inside candle. We haven't taken out the high or low of last week. Just looking at that weekly candle, big red candle, little body. It's a dodgy candle. And we're retracing that big wick on the bottom. Yeah, there's a big wick on the top, which made the new high for the year. So showing again the momentum was to the upside. The big wick on the bottom of the red candle, we did not take out the low. So the momentum is up, higher high, higher low. Naturally, we expect some kind of retracement of the prior week, being that red candle. And that's what we have here. We have a current retracement. Midpoint. Have a wick forming there. Buyers are stepping in here. Is that yellow candle? That wick on the bottom? Buyers are stepping in here. I bought some bullish positions yesterday morning on the US dollar. So on that big red wick on the bottom, shows a rejection. Buyers took control. That was all yesterday. That was all that prior week in that red candle. The euro, just like the dollar, inside candle for the week, inverse pattern. Very similar, see? On the far left, the dollar, trend up, consolidation. The euro, here's the high of the year, here's the low of the year. One big reason, the similarity, again, the euro is the largest weighted currency in the US dollar index. It represents more than 50%, maybe like 60-something%. And those weighted averages change weekly, daily. Financial institutions manage those. Now we're looking here on the Japanese yen. Last week was the low of the year. Currently inside candle for the week. Again, look, the momentum's down. Lower highs. Third largest currency in the US dollar, the British pound. Last week was the low of the year. And inside candle for the week, lower highs. So again, you can see the largest weighted currencies are near the lows of the year, trending down. Of course, the inverse of the US dollar. let's take this down to the lower time frame, which is the daily time frame. See the current situation. So these are futures. They've been open since last evening. Far left, US dollar. We're still inside the range of yesterday. You can tell by the yellow candle. Yesterday, that red candle, higher high, higher low, right inside this supply zone, sellers, because you see that big red candle move down. Natural retracement inside of it, red candle. Even though it closed red, still made a higher high, higher low than that green candle. See this big green candle, body, big strong candle. That made a higher high, higher low off this red candle. Red candle, big wick down there. Buyer stepped in, big strong impulse move up. I was looking for a natural retracement, and we did. We had that yesterday. That red candle, it's that big wick. We came in there, tested it. Buyer stepped in there. Again, I was one of those buyers yesterday, and I'm holding it because it's a swing trade. And here we are, consolidation. Nice. Daily chart, the euro. Yep. Same thing, the inverse. But the euro did take out the high yesterday already since last night. Japanese yen, it took out the low of yesterday. Trend is down. Let me update this. There we go. And the British pound took out the high yesterday. So out of these three currencies, Japanese yen took out the low of yesterday, where the euro and the pound both took out the highs. So we have mixed signals here on the three largest weighted currencies in the US dollar. Also, see these blue areas, swing highs. Potential trade ideas off those. Key word here, swing points. Swing high. Down here on the euro, it's a swing low. Swing points. I like to see those get tested. And then I look at those multiple time frames, and I'll show you one from yesterday for trade ideas. Some are swing trade, some are day trades. But right off the bat, understand the two stronger currencies here against the US dollar, the euro, the British pound, both European currencies. The weaker pair, the Japanese yen. So one, if you're looking to trade bearish a currency against the US dollar, the benefit is Japanese yen has a tighter spread, high liquidity, and it's one of the three major currencies in the dollar. So again, these three major currencies, if you decide to trade or invest in individual currencies against the dollar, be a contrarian. Go with the flow. The weaker pair. Got it? And if you're bullish currencies against the dollar, well, obviously we know, just showed here. The bullish ones, the stronger ones, the euro, the pound. That's just based on the charts. Not talking about finance, economics, your bias, or which currency might look the prettiest in colors or design. The fact is, this is how money is flowing, investors are flowing. So now let's go to the US dollar index, top down. Get the US dollar, multiple time frames. 20 years of history, the US dollar index. That's a lot of history. This yellow candle, this is April, the monthly. So month of April, we haven't taken out the higher low of last month. Last month of March made the new high of the year. February, that yellow candle. So January, that red candle made the low of the year, followed by February, inside candle. So that was not a trend. This was a consolidation. Oh, this was a consolidation. That was consolidation. Yellow consolidation. Inside candles. Strong trades off those on the higher time frames I like to look for. What happened here? Closed yellow, February. Broke outside the range to the upside. Higher high, higher low. Closed. Sorry, this green candle was March. So February was the yellow candle. March broke above February. Closed March, higher high, higher low. This was a trend reversal. We also broke out of this consolidation. So this month of this green candle, that month of March, potential reversal, and I have midpoint labeled here. Bullish bias, one could be looking, sitting on hands. See retest here for potential bullish trade setup. Whatever time frame you want to take it down to, looking for that reversal to occur. Okay, the key point is I identified my setups. Now the patience is patience. Wait for it to come back in here. Don't know when it's going to occur, but I already have a plan. My plan is this price area, looking for a pullback, potential bullish. If it goes in here, I look at it lower time frames. I know what financial instruments I'll most likely use. Now we're looking at the weekly chart, 5 years of history, each candle's a week. Call this massive consolidation occurring from the last year time range. The lower the year, bullish pin bar. Is that bullish pin bar? What happened? We took out that low. That was a bullish pin bar. Last year, reversed, went higher, higher, higher. Bullish pin bar, what happened? Reversed, went higher, higher, higher. So this bullish pin bar last year, just like this one, but this one's stronger. This green one's much stronger. Yeah, that red one I won't call it bullish pin bar. Green one is a bullish pin bar. Looking for a retracement, and it came back. It took a long time. Took back. So that was a swing low. Remember swing points? Swing points. That happened to be a swing low. We broke it. That green candle. That green candle closed. We closed back inside that swing point, and we had that reversal. Patience. Nice. And then reversed. So here's the high of the year, which was again made last week. That dodgy candle, which is very suspicious. It's almost like a dragonfly candle. So the situation is dodgies. They mean indecision. They also mean potential halfway point. They also mean potential reversal. So this yellow candle here is a dodgy. Happened to have smaller wicks compared to this red one. More like a dragonfly candle, but it's getting dodgy, still small body, higher wick, lower wick. And current week, like I said, inside candle, retesting this area. So overall, it's a consolidation up here, but that red candle, because it made that new high for the year and closed higher, high, high, low, still leaning bullish bias, but using caution because that type of candle. And this is a big imbalance area down here. Again, key levels I've labeled here. So now, the current week, we're testing midpoint of that big wick on the bottom, buyer stepping in. Daily chart. Since overnight, we're still inside the range of yesterday. Lower high, but we didn't take out the lower high from yesterday. We have not taken out the low of yesterday yet, so the trend has not reversed. Here's a swing point on the daily, which happens to be on the bottom, so that's a swing low. But again, swing point, these blue lines. Let me extend this out. There you go. You can notice here, consolidation, impulse move up, consolidation, breakout, consolidation. So staircase pattern, higher high. So this big green candle, again, that made a reversal. Higher high, higher low, off to there. Big strong green candle. I say this again because this was a sweet setup. Big strong candle, big body candle, almost a solid body. Just like that red candle, big solid body, other than minor wicks in the bottom. So again, that big green candle, solid body. When that occurred and got completed on that day, I was looking for a retracement midpoint, which occurred. Looking for a bullish setup right here. That occurred. I'm going to show you that on the lower time frame. Again, buyer stepping in right now. Looking at the 4-hour chart. Put it on 5 days. There we go. This was last Wednesday down here. So last Monday, the high here, we had a trend reversal, lower high. Green area, key level. Consolidation, reverse, look at that inside candle. Strong impulse move up, very strong. Actually, I need to update this now. So you're going to see me do some house maintenance. So that big green candle impulse move up. We did trade below that inside candle, and of course above it, and we had that huge move up. Massive institution buying there, or it might have been a short squeeze, a combination. That area is a key level right now. Gonna label that as a bullish area. Potential trade idea, or it's set up right now. So to me, it is set up. Want to see how it comes. We test that. Again, what happened here was you had a consolidation for these 4-hour candle bars. Formed that tiny candle. Look how small that yellow candle was. Tiny candle compared to those other ones. Then huge orders came in. Yep. Big demand. Solid body, strong. So that was a key area just before the big impulse move. I have it labeled for potential trade idea coming off of here. And now, after that big green candle occurred, we went up a little bit higher into this area. Consolidation, swing high, swing point, swing high, rejection, reversal. So all this, we have consolidating, probably because we have a binary event scheduled by the executive branch of the United States, the President of the United States, the timeline towards the war in Iran. So a lot of uncertainty. And then this was a swing high yesterday. I have labeled red. And this red candle was a swing low. Well, I'll give you some insight. That red candle, again, the green candle, high. Then we made the trend reversal, lower low, lower high. Went down to a key level. Again, that strong green candle, midpoint. Went down there, tested it. That was overnight. And I remember this green candle was, I think, during the president's speech yesterday. Buyer stepped in here. But again, multiple things happened here. That big red candle was the swing low. Yellow candle there. And that green candle broke that swing low. Swing point, swing low. But also did at a key level, midpoint right there. Buyers. And like I said, I bought yesterday. So I'm in both positions. Overnight here. Bearish pin bar. Strong retracement too. So that big red candle down there. We have an imbalance area. Broke above it. Took out that high. Forming a bearish pin bar. Which I already showed you which currencies inside there are temporary bullish bias. Yep. So good. Prices fluctuate. Hear that keyword, prices fluctuate. I showed you my higher time frame. I'm bullish. Across, the prices fluctuate. That's what's happening here. And we go down these key levels. If I'm still bullish, I'll be looking to add to my bullish position. Again, if we go down here and we do candlestick patterns that are bullish. So this is just a setup, a price area, looking for a test it. That does not have me put the trade on. I'm looking for key patterns in that zone. Hopefully you understand that. Yep. So Now, again, look at this green candle forming right now. This green candle gets done at 9 a.m. New York time. Made a lower high, lower low. It broke below there. So even though it's green right now, it did a retracement of that red candle. The trend is down, lower highs, lower lows. The trend has not reversed back up yet. Oh, and we have this swing low here, but I haven't updated it yet. Let's take it to the next lower time frame, the 1 hour. So just like I did here, this big impulse move up here, that big green candle on the 4 hour, and I labeled the candle just before it. Now looking here on the 1 hour, I did this yesterday or a few days ago. Label that. Let's put this on 3 days for the 1 hour. There we go. Same thing occurred here. Sorry to have it labeled, which correlates with the 4 hour. But again, it's strong. It's on both time frames. So really strong, this area, demand zone. And it was a strong demand zone here, strong move up. So the good point is you have multiple time frames showing strong area, this price range. So a higher probability, if we come down here and test it, red buyers step in, opportunities to buy on the dip. And then since these lows yesterday, massive consolidation, big impulse move up here overnight, reversal. Just key levels. Let me remove this one. Well, I'll show you here again. That was a swing high yesterday. Pre-market ran up, but not out of it anymore. Remove that. Again, that was yesterday. A big red candle, regular pre-market hours, inside candle. So that was a swing low. That red candle was the swing low over it yesterday. Swing point, swing low. And like I said, here was yesterday morning. I think there was economic news around 10 a.m. too. Yeah. So the president spoke, I think, yesterday, 1 p.m. New York time, and there was economic news at 10 a.m. You can see that big move right there. Broke that swing point and buyers stepped in there. Again, we're testing here now. Yep. And let's put this now on the 1 minute. Actually, put it on 5 minute. Be better if I show you. And I'm going to put this on 3 days. So the first thing is I want to load up my daily drawings. Put this on the daily drawing, daily chart to show you this big green candle. Remember, daily chart, big green candle, solid body. I was looking for a retracement. I was bullish bias, looking retracement at midpoint, which came yesterday. So again, the setup was on the daily chart, and the trade idea was on the lower time frame. I'm going to show you the lower time frame first in the 5 minute, but I was doing the trade on the 1 minute. So now we're on the 5 minute chart. Make sure I have the daily drawing in here. Yep. Oops, sorry. Let me just make sure I did this right. So this is midpoint label there. I'm going to put it as a different color so you see it better on the 5 minute. I'm going to label it green. Again, this setup was on the daily. There we go. So the big green candle, labeled midpoint green. Again, I labeled it green because I was bullish in that area. Now let's look at it on the 5 minute. Looking here at 3 days on the 5 minute. So the setup, again, this was the prior day there. That was the setup. And then we had regular trading hours Friday, which the market was closed. Most of the financial instruments. Zoom in here. So this was yesterday during the extended trading hours early in the morning. Again, that green area was the midpoint of the daily. So yesterday, pre-market, that was a swing low. I'd labeled there. I'll show you in a moment how I labeled it. And then during my Eastern time zone, New York time zone, regular trading hours, that was a swing low. We broke it. Okay, economic news was around here, 10 a.m. We broke this after the economic news. And then we did a reversal. So the trade I there, nice here, reversal, patience, and run up. Show you here. Bearish pin bar right there at key levels. Yep. Inside candle right there. Nice strong impulse move up. So one could have taken a trade off of here, that high, that green candle after the confirmation reversal off of that green candle. Or if you wanted to be more conservative, could have waited there for that move up and then make that gains up here for a few points, which had this as a target. This prior high, again, the reversal occurred here, the prior highs, so conservative target area pair, entry somewhere in this area, and then the target went beyond. Again, here's a target, price target, went a little bit higher because you already have this label too. Right area, nice. Let me load up the drawings for my 1 minute from yesterday. Yep. So again, I told you this was the overnight low, this yellow area in the yellow line. ONL, for me, I abbreviate overnight low. Yep. And then I think I double check at 10:30. Yep. So this vertical gold area I have labeled from 10:30 to 11 because typically I like to be done by or shut down around 11:30 a.m. in the mornings just because the markets get trade thinner. Doesn't necessarily mean I'm walking away or not going to take a trade, especially if I'm a trade, I'm going to manage it. Yep. So this was how it performed yesterday. We had that reversal and that high, that big green candle. I had labeled it as a tag in. So that was where I was looking by. And right there, that green candle took it out. So one would get tagged in. Again, I told you the target up here. That would really show you it on the 1 minute. Going to put it for 3 days, 1 minute chart. Zoom in. And the setup was that midpoint of the daily candle labeled here in the big green area. And then the other setup, which overlaps with it, was the overnight low yesterday. Again, there was the economic news was yesterday at 10 a.m. right here. And then we broke it right there on the 1 minute chart. Lower, lower, lower. Zoom in some more, show you. Zoom in from, say, 9:30 when the US stock market opened to right there. There we go. Let's zoom in some more. So over here on the far left, this is the 9:30 when the US stock market opened. Economic news was here at 10 a.m. You can see that big volatility candle. Temporary pump, pullback. And then here is when we tested the overnight low, so that yellow horizontal line. And we went lower, lower, lower. And then big green candle. Massive amount of buyers stepped in. Nice. Looking for that retracement. We came back on weakness. Again, that high, that candle, I labeled as the buying area. And we broke it. It took a while, a few minutes. Tagged in. And then let me show you again on the target area. Oops. So there we go. Some target areas. Remember I mentioned these highs. Let me show you on the 5 minute. Let's simply label purple and target. Label that target. Again, 5 minute chart. Again, I said the tag in was here. And the target, conservative target was there. Let's put it on the 1 minute chart. Now we're on the 1 minute chart. Again, the tag in was here. Tag in mean get in the trade with a target up there. And it went beyond there. This was on the 1 minute time frame. Yep. So that's the current situation. I think I shared you lots of insight, lots of good information. For a swing trade, day trades, current situation coming on Wednesday, April 29th, FOMC meeting. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching. Thank you for your support.